This conference will now be recorded.
Okay, so we're beginning now to look at merchandising companies and inventories. And so we'll be looking at JHJ Shoe Store. So I'm sure everybody know what shoes are. Everybody has a pair of shoes. So we're going to see if you can run a shoe store over the last part of the semester. And shoe stores are run by people all over the world with all levels of education. And so I expect you all to handle this material in good fashion. So first of all, we had our JHJ Rental Car Company where there was no merchandise involved. And so we simply debited cash or account receivable and we credited sales, professional fees. So that's what we do with service businesses. When we sell merchandise, there are 3 entries involved as opposed to 1. There's the first entry where we buy the item. And so we debit inventory and credit accounts payable when we buy the item. Then when we sell the item, 2 journal entries are required. One to record the sale, as was here, but a second one to record the inventory being sold, and we debiting cost of goods sold and crediting inventory. The objective is not to buy the inventory, but to sell it. When we bought the inventory, we got to pay for it. So the key entry is when we sell it, then we take those items out of inventory. So we debit cost of goods sold and credit inventory because we need to be able to reflect in our records what inventory is available for sale. So especially if you're selling online, when people go in and search for the inventory, they need to know what's left rather than seeing all the inventory with the inventory sold not being taken out. So that's what we're doing there. So
Sorry, I'm late, Professor Boyd.
We won't charge it this time. Okay, so let's begin to look at how we will work this. And in our example, we have inventory. We're selling shoes that cost $50, and the cost of the shoes were $20. So the selling price is $50. They cost us $20. And so we're going to focus on this column here where we sold 1 pair of shoes, we purchased 1 pair and sold 1 pair of shoes. So when we purchased the shoes, we would have debited inventory for 20 and we would have credited accounts payable for 20. That's when we bought the inventory. Then when we sold the inventory, we debit either cash or sales for 50. We're debiting and crediting sales for 50. But we got to make that companion entry, debiting cost of goods sold for 20 and crediting inventory for 20. And if we looked at the income statement, the partial income statement as it looks now, it would show sales of 50. It's going to show cost of goods sold of 20 and a gross profit of 30. So our inventory our income statement changes somewhat now because our operating expenses will come down here. But whenever we sell inventory, we need to know and separate out whether we made a profit or not. Then after we've determined the profit, we'd say, less expenses. So things like rent, salaries would be deducted at this stage after we've determined whether we made a gross profit. So our income statement is going to change, and you should have examples of those in the primer and the material that we're looking at. Are there any questions on selling one pair of shoes? And can everybody sell one pair of shoes? Okay, well, let's see if we can sell two pairs of shoes. So if we sold two pairs of shoes, we'd have to buy two pairs. And so we debit inventory for 40, and we credit accounts payable for 40. Then, because we're selling two pairs of shoes, we would receive $100. So we debit accounts receivable cash for 100, and we credit sales for 100. Cost of goods sold will be debited for 40. Inventory would be credited for 40. And when we did the income statement, we now have sales of 100. We have cost of goods sold of 40. And the gross profit is 60. Any questions? Well, let's see if we can sell 5
How
pairs.
you got the gross profit again?
We simply subtracted selling price less cost.
Oh, okay.
I will make
Oh,
the
you
profit.
had okay.
Thanks for that, Daphne, because a lot of times people will add it, and it's good to clarify that. So thank you for
Okay.
that question. Let's assume we buy and sell 5 pairs of shoes. So we sold 5 pairs of shoes. We'd have to buy 5 pairs. And so those shoes would cost us $100. Then we sold the 5 pairs of shoes. We would now have $250. So we make this entry. Cost of goods sold is 100. And now the sales are 250. Cost of goods sold 100. Gross profit is 150. Let's sell 10 pairs of shoes. So when we sell 10 pairs of shoes, we've got to buy 10 pairs of shoes. And so now we're going to debit inventory for 200, credit accounts payable for 200. When we sell the 10 pairs of shoes, we're going to debit cash for 500, credit sales for 500. Our cost of goods sold is 200. So we debit cost of goods sold and credit inventory for 200. And we prepare the top part of the income statement now. We debit sales 500. We would subtract out cost of goods sold 200, and our gross profit would be 300. Any questions? Okay, let's go to our next example where we purchase 10 pairs of shoes, but we only sell 5. So if you can think, you never go in a shoe store or go online when they don't have inventory. So most times we're going to buy more than we sell. So when we buy the 10 pairs of shoes, we're going to debit inventory for 200, and we're going to credit accounts payable for 200. Okay. But we're only selling 5 pairs of shoes. So we're only going to be getting 5 times 500 or 250 in revenue. So what's going to go on this line for the cost of goods sold? So we have a scholar in the house here. We got any A students in the house today.
It's not 500, is it?
100?
Who said 100?
Yeah.
Yeah, okay. It's going to be 100.
Honestly, I'm confused on that little middle part. We're gonna have to go over that again.
What middle part?
What the sales, like what we at right now, what the 250, that middle part right there.
We just simply multiplying 5 times 50 the selling price.
Oh, all right.
So it's up.
Well,
So 5 pairs of
how do
shoes.
you cost of goods sold?
Well, we look at what it cost us.
Right, 20
We
times
sold
5.
5 pairs of shoes. So that's
Right.
going to be what? 100.
Yeah.
And so now, as we look at our gross profit, 250 gross profit, 100 is the cost. The 250 says 100 is the cost. Gross profit is 150. And we have in inventory another 5 pairs of shoes that cost $100. So that's typically how a business is going to operate. So it would be great if we sold them all, but that's not how it operates. So
What is
we'll work on the last column where we buy 10 pairs of shoes and we sell 8 pairs of shoes. So it's time for you all to become active. So you all begin to make the calculations and finish the chart.
the inventory part gonna be 160, right? Because we gonna multiply 20 times 8.
You bought 10.
Wait, so what I do with the 10?
That's how many you bought. Your shoe store bought 10
Oh,
pairs of shoes.
That's gonna be 200.
Yeah.
oh, okay.
Like the last one.
Okay, I get it.
Now you sold 8 pairs of shoes. How much money you gonna get?
So 8 times 2 is that 160?
Well, I'm gonna
Yeah.
come to the shoe store. You
What'd you
sell them
say?
at cost. So I'm gonna love to come to your shoe store. You sell them lower than Walmart.
What? Wait,
What is
we
400?
it's 50
Then he
times
gonna sell
80.
them
I
at
mean
20. So that's cheaper than Walmart. I'm coming to his store.
Oh, I said that wrong. I said that wrong.
400.
It's gonna be 400.
He said you gonna
We're gonna
come.
multiply 8 times the 50, and we're going to get $400. Y'all got to be able to run this shoe store now and make some money. And so the cost of goods sold would be what?
Oh, 200.
60.
I
How
thought
much?
we would subtract 400 minus 200, right?
You're running a shoe store. You sold 8 pairs of shoes. You bought 10, but you only sold 8. So
Is that
it's gonna be
160?
8 times 20, 160.
Okay.
Oh,
Now, how much money did you make in your shoe store? Yeah, I got to
240.
just like this.
Can
Your
you redo that part again?
okay. So let's be how much money did you make?
mm,
40.
I don't know.
240.
Let's do it again. All right, start over. Fill it out.
Okay, let's start over.
Start over.
The
And you treat this as
inventory
if
is
this is
gonna
your
be
shoe store and you trying to make some money.
okay.
Where's the rest of the class today?
Mm.
Dang, I just got confused that fast. All right, so the inventory part is 10 times. Oh no, it's 50 times 8, right? No? All right.
And 20 times 10, and it'll be 200. I get the first two rows. I'm talking about, I was confused when you did 160. Like,
Well,
what
that's
did you
fine.
do to get 160?
Let's go back to the top row first. Let's get that one. You bought 10 pairs of shoes. So it's 10 times 20. So you paid $200 for the shoes.
Mm-hmm.
Have that. Then when you sold 8 pairs of shoes. So you aren't selling the shoes at 20, hopefully. You sell them at 50. So you're going to get 8 times
Oh.
50, $400. So you buying the shoes at one price and sell them at a higher price, hopefully, so you can make some money. So yeah, you bought and you got $200 in here, but you only sold 8 of the pairs of shoes. So this becomes 160, 8 times 20 for the ones you sold. You still have the other ones. You have not sold those yet. And we get ready to do, okay, how much money have we made just on selling the shoes?
400.
About, we sold them for 400. How much did they cost us?
160.
So what is our gross profit on the shoes?
240.
Oh, oh shit. Wait.
Can we run a little shoe store?
I see.
Can you run a shoe store?
Absolutely not.
Will we be subtracting like 400 minus 160 or something?
Correct.
Yes.
That's correct.
Okay.
And y'all got to be able to run this shoe store.
So it's 340.
Question.
I think it's 240.
Mr. Boyd, I got a question.
I mean
Yes.
240. I mean 240, my bad.
What does AR mean?
That's account receivable. So you can get account receivable or cash. You can use either one. Let's just use cash, but I just put it there so you would know. Sometimes you sell shoes on credit, I mean on account where people pay you later. Sometimes you pay right away when you run the shoe store. So if you're going to a Macy's, sometimes they sell for cash and your credit card. Other times they have their accounts where you pay them later. And hopefully you pay them so they don't have a bad debt. All these ladies with these questions, I bet they got a room full of shoes. So assuming So no, a bunch of y'all got it. And then how many pairs do you all have typically, ladies? Because men have those sneakers, but how many pairs of shoes do you all typically have?
About 30.
At 30. So we've only dealt with 10. So if y'all got 30, you had to sell some of them. You know, you don't need them anymore because you're gonna work at home. The buyers in the future, so you're selling your shoes.
Okay, so what's after that? This is it.
Well,
Maybe.
in the handout, I think I worked it out, got it here for you. But there's always a little bit more.
Oh,
We run into the situation when we sell inventories that cost different amounts. In this example, all the inventories cost the same amount. They all cost $20. But sometimes that's not going to be the case. The inventories are going to cost different amounts. And so we have to come up with a way to cost the inventory when they cost different amounts. 3 ways to do it. We can sell the first ones, first in, first out, FIFO. We can sell the last ones, LIFO. We can just sell them as a weighted average. So there are 3 inventory valuation methods: FIFO, LIFO, and weighted average. And we're going to start off with FIFO, and you'll have a quiz on FIFO on Tuesday. So we're just going to look at
FIFO.
First in, first out. So the 3 methods: first in, first out, last in, last out, and a weighted average. We're just concerned with FIFO right now. So if you can learn FIFO, then you should be able to pass the next exam. B students got to learn FIFO and LIFO. A students got to learn FIFO, LIFO, and weighted average. But let's just concentrate on FIFO. Look at my example there. In first in, first out, they're loading the inventory here. We're pushing it forward. Okay. Then when they get ready to sell it, they're selling the first ones that are in. Does that example make sense?
Yeah.
Okay. So when the inventory comes in, they just put it to the back. And then when they get ready to sell it, they come to the front and get it. So let's assume that you purchase 100 pairs of shoes for 15. Then you purchase another 200 for 20. So you can see we got different amounts in here now. We got $15 shoes in here, and we got $20 shoes. And we sell 150 for 40. You change it. Okay, so what's going to be the cost of the shoes now? So what companies do, they have an inventory flow chart. Okay, like this. So they have a chart like this. Who's that making all that noise in there? Go into the chart so we can start back over. There are 3 columns in this chart, which will become your best friend over the next couple of weeks. They're the purchase. When we purchase an item, it comes in the purchasing, and then it moves over to the balance. So the purchases move over to the balance. So in this case, we purchase 100 pairs of shoes for $15 each. And so the price was $150. Okay, so the total price is $150. And when we do that, then they can move to our balance. So this is how this column, this chart works, because if we're selling a lot of inventories, we got to keep a chart like this for each pair of shoes, actually by size, because people, when they're trying to buy, they got, you got to be able to know what you have and purchase when you don't have it, so you have an appropriate amount of shoes.
Professor Boyd,
Is
wouldn't be the total be 1,500?
You're right. Thank you.
there a reason you skipped the first line?
What?
Is there a reason you skipped the first line?
Because we don't have beginning inventory in this example,
Okay.
but we'll put that in later. So this is the purchase.
Quantity is 100.
And we're gonna make the same entry. Come up, so. Where we're gonna debit shoe inventory and credit accounts payable. Got it? Same entry. Then we make another purchase. And we buy how many? 150. No, we purchase 200 this time. But these cost us $20. And so that's gonna be what? 2,000?
Yeah. 20 times 2.
And we're gonna transfer those over.
It's 200 times 20?
It's 4,000.
Yes,
It's 4,000.
is it 4,000?
Yeah.
Okay, so they came on over. So that's how we stand after those first two purchases. So whereas before you just had one purchase, now you got two purchases. And so to keep track of things, we keep this table. Then we sell 150 pairs of shoes for $40 each. We sell 150 pairs of shoes for cash for $40 each. So we've got to reflect that in the chart as well as in those two journals. Remember we said there, when we make a sale, there was always two journal entries. So we got to make these two journal entries now. Now, something for you to keep in mind, only the cost number is going to be in this chart, okay? So we never going to have the selling price in this chart, only the cost. And I'm going to say it a second time because some people are hard-headed. Only the cost go in the chart, not the selling price. And for the third time, only the costs go in the chart, not the selling price. So when we make the sale,
So the cost is the 15 and the 20?
right, and that's the only thing I want to say in this chart.
Okay.
So we sold 150 pairs of shoes. So what first in, first out says what? What we're going to sell first? Which of these shoes are we going to sell first?
The 100?
We're gonna
Yeah, the
we're
cost
gonna sell
15.
those first. We're gonna sell that 100 at 15, and so all 1,500 of those are gone. Okay.
Okay.
But we actually sold how many at our shoe store?
150.
So we got to sell 50 more. But what did those cost us?
Oh, wow.
40 each.
Didn't I just say that selling price didn't come in this chart?
Right, all right.
Didn't I tell you somebody's gonna try to put it in?
50.
Mm.
She said, So how
So
do you know?
this layer is gone, so we're going to this layer, and so we're gonna sell 50 of these at 20. Okay.
That's 1,000.
Okay.
So cost of goods sold is how much you paid for them, not how much you're selling them for.
That's correct. How much you paid. So the only thing in this inventory flow chart are costs. That's the only thing in here. So I'm gonna put down here in bold.
So why that 50 right there under the 100?
Let me get this in here first. Cost only. Now, what were you talking about? Whereas what?
Why that
You
50 right there under
sold
the 100?
you sold 150 pairs of shoes. Okay.
Oh, okay. All right.
We sold all of these, then we came down here and sold these. So
So
our totals that are gonna come in here, and I'll just bold them. Sold 150 because we gotta get some totals.
I got confused.
And they cost two sets of prices, but the total cost of these shoes was 2,500. Okay.
We've added.
Then what do we got left in inventory now?
Uh, 50? Oh,
How many pair of shoes you got left in your inventory?
150.
Got 150. And their cost is what?
20.
20. So that would be what? $3,000.
How come we don't total up the unit cost in the middle?
Because it has no significance. You sold
Oh,
115 and 50 at 1,000.
okay.
so
Wait,
like
I'm
we do that by ourselves, like
What you mean? What you mean? Do it by yourself?
okay, well we sold 150 shoes altogether, but like
Like
where it
what?
say the 50, where it say the 50, and then we sold the 50 pair for $20. But like, can it be vice versa? Like, can we sell the 100 pair of shoes for $20? That's what I'm saying. Why that explain like the 50 part?
Okay, let's go back here. You have
oh, because we had
in your
300.
inventory 100 pairs of shoes at 15,
Right.
200 at 20. See that?
Yeah.
And you sell 150.
Right.
So now we're ready for the cost of goods sold column. Because we're selling the first ones first,
Mhm.
because we selling the first ones first, we're gonna sell these first.
Okay, so we're gonna sell more because we sold those first.
We're selling the old stuff first. You know, you go to the grocery store.
All
What
right.
do they have you buy?
All right.
What do they have you buy?
Produce.
Do they? Well, you might try to reach in there, but when they stacking that food, how do they stack the food?
The old stuff first.
That's right.
Okay.
Well, Mr. Dr. Boyd, for the last part at the ending balance.
We haven't got that for you yet. Again,
Oh, okay.
we just here talking about 100 at 15 and 200 at 20, and you sell 150 pairs of shoes.
All
Mm-hmm.
right.
So we got, how many we got to sell?
300.
Yeah, 300.
Selling
Yeah, 300.
150 of them.
Gotcha.
So we go and we sell the old ones first.
Okay.
115 and so we sell all of these. Then we sell 50 of the new ones that cost 20.
Oh, I get it, because you get
Okay, I get it now.
you only
Got
got
that? Oh, okay.
because you only got 100, but you had 150 sold, so you got to sell 50 more of that. Okay.
Out of that new layer.
Right.
Hmm.
Then we add them together. Because when we get ready to make that journal entry, the purpose of this chart in this middle section is to tell us how much, is going to be in that second journal entry. This is what you got left. So Nathan, what was your issue about what's left?
I think you answered it. Oh, why'd you put the 20? That's because that's what you have
What's
left
left.
selling.
What's left? All of these are gone.
Right.
And 50 of these are gone. So you only have this left.
Oh, so that 3,000 is the 150 times 20.
Yeah.
All right.
That's showing what
Where
you
the
have.
hell the 20 come from?
So what? What
Hold
now?
on, let me think. Hold on, let me look at it.
The
That's-
Cause
200.
I don't understand. All right, I understand, but I don't. But I do.
Yeah, but you don't.
Okay. The total, okay, boom. The total 150 right here. Boom. And then we had multiplied to 15,000, that's 2,500, right? Okay, boom.
So we just
Then
added
over
these
here,
numbers. We added the quantity.
right, that's what I'm doing.
We added the cost.
Okay. And scoot over again, back to 150. Scoot over. Yeah, right there, right there.
Right,
That's
right.
what's left.
Okay.
You put dollar signs on
That's
it?
what's
Right.
Because I don't know it gets confusing when we're talking about quantity and the money amount.
All right. I need me a person to put dollar signs in. So these are dollars.
There you go.
Oh, I get it. We only sold 50 of the 200. So that's why you put 150 with the 20, because we still got to sell that 150.
Mm-hmm.
More pair of shoes, because we only sold 50.
Make a
All right, I got it.
Got it now?
I got it.
So do we have the 2,500? What's the difference between the 2,500 and the 3,000? Like, what are their significant?
2,500 is what you sold.
Okay,
Okay.
I get it.
And
This is what you still got to sell, if someone said.
So leftover, we have $3,000 worth of shoes left in inventory.
Mm-hmm.
Oh, okay. Okay, got you.
That we need to sell. Any
Oh
questions?
yeah, I'm gonna mess that part up.
How'd you say that?
Cause he caught my attention when he was like the 3,000. I ain't, yeah. Mm-hmm.
So we got the 2 purchase journal entries. Now let's do the sales and cost of goods sold. We sold 150 pairs of shoes. The selling price was 40. So what's 40 times 150? What's 40 times 150?
6,000.
6,000. So we're gonna debit cash and credit sales for 6,000. Got it? Now we need to make that second journal entry, debit cost of goods sold and credit you inventory. We'll come right up here, see what our number is, and drag that down to that journal entry. So the purpose of this chart is when we have multiple layers of shoes to give us the amount for the second journal entry. So the purchase journal entry, those purchase journal entries go in the chart. That's in the chart, that's in the chart. The sales journal entry does not go in the chart, but then the cost of goods sold entry goes in the chart. So make sure you're clear on that. Then here is the income statement. 6,000 less 2,500, 3,500. Y'all ready for a quiz on that on Tuesday?
No, no, sir.
No, sir. Don't even start that.
No quizzes. Okay.
Don't even do it.
Why?
You gotta give us one more class period. Give us a new set next Tuesday, and then we can talk about it. Right now,
How come the net income is 3,500 when at the top we made 2,500 off that sale?
Okay.
Oh.
You sold them for
The sale minus
6,000.
the cost of goods.
They cost you 2,500.
Mm-hmm.
So how much did you make?
3,500.
Oh, you made 3,500.
Mm-hmm.
Okay.
That's the objective. All right, we bought the shoe. That's a journal entry. But the objective is to sell them and make a profit. So if you come in here and this says this be the gross profit. If you to make a profit, then something's wrong. You can't run a business unless you sell for more than you buy it for. Doesn't that make sense?
Mm-hmm.
Say less cost of goods sold. Why don't it just say cost of goods sold?
Say what? Why did I say less cost of goods sold so you remember to subtract it rather than add it?
Oh, okay.
Okay. Because some people will try to add it.
I don't know. What's the error? What is the error on? 72. Ooh, keep it on 69, please.
So your gross profit is that your net? Is the net income the same as gross profit?
No, this should be gross profit.
Okay.
Because you're going to have your operating expenses. You got to pay rent, advertising, salary. So we are layering these 3 journal entries on everything else we've done. So you can imagine you'll have a problem where you have these journal entries plus all of those other ones.
Oh yeah, we're not ready for Tuesday.
Ooh.
When are period 3 grades coming out?
No, I guess when Prudence gets to them, hopefully she'll get her computer fixed.
Oh no.
I just want
To her.
I just want to see what I got on my last test I took the other day.
How come you can't grade them?
You know. Why are you laughing?
That test ain't count.
I grade them right and wrong, and she gives you the benefit of the doubt.
Okay, yeah.
Okay?
Mm-hmm.
So take a student perspective. I'm more harsher, so a lot of time they, when we're in the office, she goes and gets the stuff so she can give y'all the benefit of the doubt. You already know that. All right. Somebody said, well, let's have an example where we have some beginning inventory. So we have beginning inventory, 25 units. I ought to change that, but I won't. At 15, then we purchased 220, purchased 115, 220, then we sold 150 for 40. So we had in beginning inventory 25 units. So there 25 units, 15, 375. Any questions? Then we purchased 200, 115. Then we purchased another 220. So before we make our sale, we got one layer in here at 15. Then we got another layer here at 15. Then we got a layer 20.
I just got confused. What are you talking
So
Oh Lord.
what are you doing with those numbers then?
What do you
about?
want me
Yeah,
Like the total? Like what are
I
you
ain't
doing
done
with the
anything yet.
35 of
I ain't done anything yet.
Okay.
I need
I
some
ain't
good
done
air.
anything yet. Donald Sanders in here for Joanna.
why your unit the number of your units jump like that? Like the first one, okay, 25, 15, and then it was 375. Then you got 100. Oh, okay, I see it.
You run a shoe store trying to make money. You can't make any money if you don't have any shoes bought.
Yeah, I see it.
What do you do when you go to a shoe store and they don't have a lot of shoes? I bet you
Ask
just
for a
strut
discount or
right
something.
out.
I don't know.
So you got to have a lot of shoes in the shoe store. So at this point, we got 25, 100, 200. So we have 325 pairs of shoes for sale.
Where you is that?
We got 325 shoes to sell.
Yeah, we have 325 pairs in our shoe store.
Two,
Who
three.
gave
I
you the
got you.
number?
I see it. I see it. Okay.
Add them up.
Oh,
Oh,
I see it.
I see
Give it 25 plus 100 for 200. This quantity column.
you. Right.
Okay, so the next thing that happens is we sell 150 pairs of shoes.
Okay.
150 pairs of shoes. So what we're gonna do now?
Dang.
I don't
So
We're
we gotta sell the
gonna
first 25
sell,
15,
the
we're
100.
right?
gonna sell these old ones first. That's 25.
Mm-hmm.
The unit cost was 15.
Okay.
So their cost is 75. So we sold, that's 25 sold. Then we're gonna go and sell this 100. They also cost 15.
And then you gotta sell another 25.
Yeah, you have it. You know, sold all of these old, you know, sold all of these. And now you're getting into your latest ones you bought. You selling them. So you are making money for your shoe store.
What if the beginning amount
What?
was a I said, what if
That's
the
the
beginning
beginning
amount?
amount here. That's the beginning amount.
Yeah, I'm saying, what if the beginning amount enough to cover all the ones? So do you even document the other ones?
Then you run a bad shoe store.
No.
So if you only sold 20, what kind of shoe store you run?
No,
The,
50
you know,
shoes.
the object is to get into these other layers, you know? So that could happen. Not saying it won't, but I'm just trying to get you to see the overall thing you're trying to do. So we had 325 pairs of shoes for sale. We sold how many?
150.
150. We sold 150. What was our total cost of the shoes sold? Now add those up for me. 2,000.
2,370.
And we have these left in inventory. Okay. Any questions? How does our income statement look now?
Wait.
First of all, we make the journal entries for the 2 purchases. Now we already made this journal entry because we already have those on hand. So we make the 1,500 in the purchase, and then we debit cash, credit sales and revenue for 6,000. Where do we get the 6,000 from? Where does that 6,000 come from?
That's from the
Where did
150.
it come from?
That comes from 150 pairs of shoes sold for 40 each.
Professor Boyd, where you got the in the end balance? Where's the 175 coming from?
That's a good question. Where does that 175 come from?
Because shouldn't it be 300?
Only
That's how many
25.
You sold all
left.
25 of these, you sold 100 of these, and you sold 25 of the 200. How much left? You sold
Oh, that's where
25 of the
the 50
200.
came from.
How much left?
Oh.
175 pairs.
Understand? So the 6,000 we simply multiply 150 times 40, and we get 6,000. Where does 2375 come from?
That's from the sold. That's sold.
You go, that comes from, that's why we have this table in this column.
Right.
The purpose of this column is to tell us how much goes in this journal entry. So in this case, then I'll change this to gross profit. How y'all gonna help all those people who missed class today?
No problem.
I'm gonna make y'all tutor them, I guess.
Oh no, I can't tutor nobody.
So is the third section on the journal entries, is it supposed to have all like those 4 lines and not 2 and 2 like we normally do for journal entries?
Oh, here. What are you saying?
Okay, like you see how it has number 1, 2, and 3?
Uh-huh.
For number 3, is it all supposed to be like those 4 lines together?
Yes,
Make up
because one journal
entry.
entry for 2
Okay.
parts. One journal entry, two parts.
Okay.
So the thing is, you can separate them out, but it's to let you know when you sell, you got to make two journal entries. Got to make two journal entries. So we'll leave LIFO on. Let's see if we can go back in here and find something to work on. LIFO comes next. A little example here. We'll do those. Won't worry about those yet.
Ooh.
If for LIFO in the situation you gave
We're
us,
not gonna talk about LIFO yet.
oh, well, all right,
We're gonna go to this practice problem.
that's so quick.
Okay, see, in this practice problem, and we just doing FIFO, we have beginning inventories, this, and this. And you invested money in your shoe store, you purchase, sold, blah, blah, blah. And so what you got to do on this column is to do the inventory flow chart, journal entries, and the income statement.
But why we got so many?
Because y'all
If you
grown,
get what I'm saying.
y'all can handle a lot.
When is it due?
It's 3:34. You think y'all can get it done in about 10, 15 minutes?
No,
Who? Hell no.
it gets
Is
done
we
from
turning this in or we just doing this for practice?
Wow.
You need like for I don't know. You need to shorten it. We got like you got 1 through 9. We've been doing like 3 of them at a time.
Okay, so I actually think on this practice problem,
What's
it
this?
has already worked out for you. You just look at the FIFO stuff. So here is your FIFO inventory chart. You don't worry about LIFO and weighted average yet. Then you're going to see a different way we do journal entries because a lot of the journal entries overlap. We do it this way here, the FIFO, LIFO, and weighted average. So you're just in this column here, but you'll see a lot of these journal entries will be the same when we do LIFO and weighted average. But right now, all you're concerned about are these first two columns. And the journal entries are being made. So what I want you to do is to go through and see if you can understand everything that was done in these journal entries. So you should have to turn it in. You could have just looked at this and pulled it out and turned it in, but you had to ask. Then here's the income statements, which shows sales, less cost of goods sold, gross profit, less those expenses, net income or loss. Sometimes the business loses money. So this is worked out for you, okay? So the first thing you're gonna do when you get off, when we finish up today, is you're gonna go through and look at a practice problem where there's more than one transaction, and you're gonna look at how this inventory chart operates with more than one transaction. They had beginning inventory and they bought some. Then they sold some. This is what they had left. Then they bought some more. Then they sold some more. This is what's left at the end of those transactions. So you want to study this flow chart. You don't have to worry about weighted average. So you need to post those entries into your account. Let's see. 1, that was showing some years to get those for now.
What are you on for?
Okay, so here is your homework problem here. 5-1, which is on page 37. 5-1, which is on page 37. So this is what you need to determine to me next time. But only the FIFO part. This later, go back and do
Everyone does the same one.
but now this is a practice problem is we put everything together.
I can't hear.
So you can in, then we'll go over it next time. Format of how that journal needs to look.
Somebody speaker tripping.
Yeah, it's pretty loud.
Please.
When is it due again?
I got all the sheets in here for you. And we'll go over it. No, you just got to work this. So here's a ledger account for sales.
I can't hear.
Right?
I get rid of it.
Yes,
Yeah.
thank you.
Yeah.
Okay, so here's the tier count for cost of goods sold.
Mr. Floyd, what is this?
We gotta do all that?
So you can work in that. This accounts for you. Okay.
You gotta wait. I don't even know what you're talking about.
Wait, you going too fast. You just said we was only gonna work on one. Then you hit us with all three.
Yeah.
So all you got to do, all you're doing is that only FIFO. That's all you're doing.
For all three?
Only FIFO.
But we didn't do LIFO.
All you're doing is FIFO. So you're doing this problem, just doing the FIFO. You're not doing any of this.
All right, let's do number 1 to make sure I'm right in the head.
What page in
I
the
think I'm.
I can't find it.
You can't find it. I got page numbers.
I know what page is it. I can't see what page it is on.
We're on page 37. So it says beginning inventory, 1,000 pairs of shoes at 20 each. So we don't need a journal entry for that. Then we purchase 1,000 pairs at 25. We're just gonna put debit inventory. Then I have 1,000 at 25. It's gonna be 25,000.
What?
And we're gonna credit accounts payable. Now, eventually you'll be able to just run across the whole thing. But this is this first purchase where we buy 1,000 at 25. And so if we go to the inventory chart, we have beginning inventory of how much? 1,500 at 20. So in our beginning inventory,
30,000.
1,500 unit cost is 20. So the total is what?
30,000.
Then that first purchase was what?
I couldn't see.
First purchase was 1,025. So we're gonna come into the chart. So we had a purchase 1,000 at 25 now. So that's what, 25,000?
Yes.
Yeah, let's see if we can move these over today. They are. You just got to keep going. So I'll make sure I put that in Blackboard for 10 points.
How much?
10 points.
Can you make it 50 points since we have the coronavirus going on?
When is due?
Tuesday.
All right.
Then when you do LIFO, you get another 10 points.
We
Then
don't even know this LIFO.
get another 10 points. So you're just working on your first 10 points.
We only have to do 5-1, right?
The what?
We only have to do 5-1.
Yeah, all you're doing at this point, 5-1, LIFO.
Okay.
And you need to realize probably on next Wednesday, I'm going to need to do it for LIFO, another 10 points.
All right.
Then on next Thursday, next Tuesday, damn here, next Tuesday, you'll be assigned LIFO. Then on next Thursday, you'll be assigned weighted average. So every time you go through the process, you'll get 10 points. What a deal. Just sitting in the comfort of your home. Just sitting
Professor Boyd, can you scroll down so I can take a picture of the example you did?
Say that again.
Can you scroll down so I can take a picture of the example you did? The chart. Some more. I think it's that one.
Now you got examples of all of this in that sample problem. Okay. So this is the last thing we're covering: inventories, FIFO, LIFO, and weighted average. And as we indicated, we will do a lot of work so that we can hopefully just be working with some multiple choice for the final. Do you remember we talked about that, or would you rather not do work and have a comprehensive final?
What does it mean? What does it mean to have a comprehensive final?
From the beginning to the end.
Oh,
Oh.
Yeah, Lord.
Definitely not. No, let's not do that.
Can't do that. I don't know if we do that.
Ooh, Lord.
Y'all need to work these problems then.
Please, sir, for the grace of God, the coronavirus is happening.
I'm trying to get you ready. You're going to have to, they're talking about school, we may be online in the fall, possibly. Then you may be working online in the future a lot, so you got to get used to this.
Yeah,
Okay.
I believe that.
Okay, so you'll have a good weekend.
All right now.
All right, Professor
Like
Boyd.
say, if you're in Dallas, don't go to any parties. And we'll see you all on Tuesday.
Can you
Okay,
scroll down some more?
Where? Where you want me to scroll to? Oh,
Right
yeah.
there. Right.
Oh,
oh, hold on. Let me get that.
all right, go ahead and get that.
Professor,
Yeah.
Professor, when did you say you was gonna grade the test?
I said that when the TA's computer gets fixed, she's going to grade the test.
You said what?
My
When the
my
TA's
my
computer gets fixed, she's going to grade the test. And we talked about the fact that she gives partial credit and I don't.
Oh.
So yeah, better off if she grades. But if you want
Oh,
me
okay.
to do it without partial credit, just email me and I will.
if we need partial credit,
If I grade, she gives partial credit and I don't. It's either right or wrong.
All right.
I don't know what I'm talking about.
Okay, have a good weekend.
You all too.
Look, my test had turned off in the middle of the test because of my Wi-Fi. Bad.
Did you email that to me?
Yeah, I emailed it. I said that I was having technical difficulties due to my Wi-Fi, and then that time session.
Wasn't that much time. It was a short test and a whole lot of time. But we'll look
What?
at it. Anybody else?
All right, thank you, sir.
You're welcome.
And we get 20 points for the attendance today.
You get 10 points when you work that problem
All right, thank you,
that I
sir.
just gave you. Every
All
time you do a section, you get 10 points.
right, that's a blessing.
That's
All
a
right.
blessing.
All right, thank you. Have a good weekend.
You all too.
All right.
Bye. You still there, D? Delicia? All right.
Professor, wait, what did you say was due? I'm sorry.
Where you been?
I did. No, I had left. I had left and came back.
Left. So
No, I was here, but I didn't hear you.
I said
Like
this
where?
problem is due.
I don't know, but what tab is it under?
It's on page 37. So I sent it in course content. So we all would have the same thing, the same page. And some people don't have it, but y'all don't even thank me.
Yeah, thank you.
Understand.
Okay. Under course content, under where? Which file? Because I'm here right now.
It would be the last thing in course content.
Oh, the inventory insert?
Yeah, merchant. Yeah.
Okay, back.
So all that's there numbered.
Okay. And that's due when?
Tuesday.
Okay, yes, sir. Thank you so much.
You're welcome. Yes, Delicia. You still there? You gone? Yes, you gone.